SOFI update here on the 1st. I think I have a little bit of time here in the morning. So obviously yesterday we tanked a little bit farther than I talked about in the last video. We came out all the way down here to 660. The falling wedge is still intact, so we can still come down farther here. Straight away it would be 655, but if we're going to follow that, what I had laid out in the last video, then we should see a bounce and then come down like this. That would play out as an ABC move, as all these have. And you, of course, can draw the parallel line here. Potentially goes all the way up here, but probably not. 745, maybe it comes up here. This is actually a supply zone right here. So if the Fed is more dovish than everybody thinks, then there's a chance we could run to 744. That's the next supply zone. But if I'm measuring this to the same extent, assuming that we're right here, so this was a spike down right here, pretty much the same time frame too. This retraced to the 0.38 fib, so then I'd be looking at maybe like 720. Maybe like 710 to 720. So not that big of a move, but that also took like 3 or 4 days. Go back here. It took like 3 or 4 days, and then we got that final move down here to 446, and this would probably come down here to 640. That would be my target. That's my target from the last video too. That would be a double bottom with this. If it is to break 640, let's say the Fed comes out and they're really hawkish, then you got to start looking at these gap fills. You have a $6 gap fill here. You have a $5.50 gap fill here. If we're taking the top of this and the top of this, for assuming that this is going to go all the way down, then you're probably looking at like 575. The reason I like this falling wedge though is because of the fact that this is not an impulse move, and it's following the falling wedge pretty well. So we'll see if we get it. This really wasn't a falling wedge, but it's similar. It's just a little bit different, but we are, I think, in a similar spot right here. So let's see if we bounce today. If we bounce, I'm looking for 710 to 720. If we break right away through 657, then you're probably looking at, well, you got to see if 640 will hold. If that doesn't hold, you're probably come down here to the $6 gap fill. So, and we're below all the moving averages. The moving averages don't really, on this stock, the moving averages don't really matter that much because it's so manipulated. Like down here, really bearish, and then all of a sudden really bullish. Really bearish, really bullish. It doesn't really matter that much. So I'm just watching this trend line right now. Let's see if we can hold 655 here going through the Fed meeting. And let's see if we can get a bounce back up here to 710, 720, maybe up to the supply zone at 744 if we're really bullish. And the market's falling pretty hard right now, actually. So we'll see how we hold up. It is up 1.77 today. Let's hope we get a bounce and then one more move down here to 640, and that's it. That's it for this video. Quick video. I'll put another update out if anything big happens, but that's it for now.